Hello everyone. So I've been threatening to do this video for a while and not getting around to it, but for people who haven't followed me for as long, they haven't necessarily seen the evolution of how I trade. I wanted to do something on supply and demand that's relatively quick and easy. And then I'll do a second video later on how to actually enter in the zone. So this video is just going to be on how I draw them. And then later one will be the considerations for entry. It's a lot more complex with the considerations for entry because there are so many factors and it depends a lot on your personal style. Are you a swing trader or a scalper? Do you like holding trades? Are you at the computer all the time? Your trading frequency, any number of things. But supply and demand remains consistent regardless of what you trade or how you trade. So to start with, I always create a chart from top down. So here we've got the annual chart, and then you can see I've got all my time frames laid out across the top, going from top all the way down to 30 seconds in this case. And on top of that, the other initial setup is that if you draw a zone or if you draw a rectangle on the chart, you can save your drawing templates here. So you go into the toolbar for the rectangle, save your drawing template, and that way you can set all your colours up so you haven't got to be doing it every single time, and the format and how you want it to look on the chart. So there's that, and then similarly with the lines, so I run lines across the opens of my zones as well, and again I have all those set up, all the different formats that I use, because you get a bit more distinct with the lines on, for example, month, 2 month, 3 month, 6 month, I have the text against those. So what is supply and demand? So supply and demand, basically the whole chart is made up of supply and demand. There are always going to be sellers and buyers at every single price point. Even though, so normally we talk of demand as being below the price and supply as being above the price, because the supply is those who are selling and demand is those who are buying. However, like I say, you will find sellers below the price as well, because there are people with stop losses. So for example, somebody who's longed here has a stop loss here, that's going to sell if the price goes down there. And so what you're saying is at every price point there is some sort of liquidity. There are unfilled orders left behind, so when prices moved away really fast from an area, there'll be unfilled orders that didn't manage to get filled when price was there. Maybe they're waiting for a slightly better price, a bit too late. Then there are stop losses, like I've just said, for those who are filled. Any area is going to have stop losses in the opposite direction. There'll be potentially new take profit orders. So if somebody's shorted the top here, they might have take profits down below various areas. And finally, there might be like break-even take profits, which is essentially the same thing. But if somebody has shorted at the bottom of this by mistake, then they might have their stop at break-even just to get out. So what you're looking for when you look at a chart is, like I say, those orders are going to exist at nearly every price point. There'll be orders and then market maker orders where there aren't specific orders existing just to fill liquidity. But what you're looking for is where are the more of those orders? Where are people wanting to buy, wanting to sell? Where is liquidity for large orders to be filled? Where might people get stopped out? And you want to jump in the same direction as the people, as we know where those orders are and as where everybody else is getting in. So in the case of this, so how I would start to think about this is, so initially here we've got a big green candle and then we've got a red candle, followed by a bunch of green. So in this red candle, whilst this was dropping here, there were a bunch of people who shorted. So there's a bunch of their orders left behind, like I say, break-evens. If people have been holding for the last 6 years, which maybe they haven't, there's people who potentially wanted to buy here. You can see, for example, here it just retested the top of that red candle. Maybe didn't even quite tap it, but there's people who would have wanted to buy just throughout this period that didn't get a chance to get in the $300 range, and may or may not ever get the opportunity to enter again now. But what you're looking for is an area of consolidation where you can see the buyers have been battling against the sellers, and normally that will take the form of green, red, green. In this, on a yearly chart, it's going to look much more like that. But you know, as you go to lower time frames, you'll see maybe green, red, green before it takes off. So you know what you're looking at is where is the consolidation. Now people can draw. You can choose to draw these how you like. All I'm doing is telling you how I draw it, and this is consistent with some of the public people. So like Sam Seiden, for example, is one of the people who's some of his literature I looked at on supply and demand. I think he's consistent with this, but I think you know, ICT I think uses order blocks. I believe he might use the top of the wick. So what I would do is I always draw from the body of that red candle to the bottom of the wick. And I say always, no, okay, there are some exceptions. If that green candle had gone lower, then I would draw also to the bottom of the green candle, but I guess we'll see examples of that later. But again, what I'm looking at, so it's not an exact science. So while I have, like I said, I use lines, you're really looking at a zone. So it's up to you how you draw it and how you trade it. If you want to draw it from the top of that wick, even the top of that wick, that's up to you, because there are still people who shorted the top of here who are trapped. So there are still going to be break-even buy orders to get them out if price comes back there. However, I've found doing it from the body to the bottom wick more reliable, and the reverse applies on the sell side, which I guess we'll see later, hopefully see later, although I have chosen the Bitcoin chart, which is in just this great annual uptrend, but we should certainly see it on the lower time frames later. So yeah, so I would draw it like that on the red candle, looking for green, red, green, and then I tend to draw a line across the top of it. And I only, like, I used not to use lines, but it was literally because when you get that many zones, and particularly when you've got 1 week, 2 week, 3 week, they start overlapping, and it can become quite hard to see with only the colours of these zones. However, the line shouldn't be taken as gospel. I mean, you know, in this case, it does appear it's tapped off that line 737.7, and the low was 735 on that candle, so like a couple of dollars. But that doesn't mean that it necessarily will, like it could come deeper into this zone. So do see them as zones. So from a yearly perspective, I'm then drawing yearly demand there. And now, so while this looks like it is a yearly demand, this candle hasn't closed. So, and obviously we've got another however many months, 7 months until this closes. So I wouldn't draw this as a demand yet. So it's only if this candle closes above here towards the end of the year. However, what I will sometimes do, or often do actually, particularly on the higher time frames, or even on the lower time frames, if I'm trading the lower time frames actively, what I do is I'll do a dashed line. So just so I know that that's a yearly level, but that the candle hasn't closed yet, but it's just a level to take note of a significant level should price come back there. But I know from the dash that it's not confirmed. I also use dash lines for other reasons, but may get to that hopefully. So once that's done, I then drop down to the lower time frame, and then we've got the 6 month. And so, like I say, I always build this up. I do the whole chart, but obviously, like, while it seems like it's a massive effort for now, for me this is pretty quick. I could draw a massive monthly box all the way down there, but I'm not going to in this instance. Yeah, so once the chart is built, then you just need to keep updated the current time frames and as each new week, month, etc. closes. So here again, we've got a similar scenario inside this annual zone. We have a green, red, green, and then a push up from there. And so this is an example of where I would draw lower. So I would draw from the top of that 6 monthly candle down to the bottom of this next candle. And again, like I say, it's open to debate and it's up to you. And really, like, you know, if it came all the way down here, you may not want to be entering anyway because it's come very, very deep in the zone. But more to the point, that all these are sort of really showing you is where your stop loss should be. So if you are entering based on this 6 month demand, your stop loss would be under this 6 month, taking consideration of the year, etc. So on the 6 month, there's nothing else here. There's no new green, red, green type scenario. So then down to the 3 month, and so we've got a good few more 3 months down here. And so if it's this far away from the price, I won't necessarily do all the detail, but I'll do it just for the sake of this video. Oops, Control V. So you've got three little 3-month zones in there. Oh, so that's already in a monthly colour. So as I draw each of these, obviously I'm using the correct colour. So brown for me is monthly, 1 month, 2 month, 3 month, 6 month, any monthly related zone. And then up here we've also got a 3 month. So I don't love this zone as much. I'll just make a quick comment here. So like I do draw these like as it's, you know, it's still a green, red, green, and you can have multiple reds, etc. I don't love how this is kind of green, green, red, green. Like when it's offset, I call it offset from the price action, and it's somewhat hard to explain. I don't consider them as reliable. But again, I'm just telling you that purely because that's something you need to consider when you're learning how to trade these. But for the first point is learn how to draw them, and then the second point is learn how you want to trade them. So that was a 3 month there. There is also a 3 month in here, and this is what I would call an indirect. And like I say, I would make that a dash line as well. Make that 3 months. Indirect is again a little bit harder for me to describe what it means. So obviously it's not the green, red, green that we've seen. Well, it is a green, red, green, but it's obviously the red has gone much deeper and the green has gone much higher. And there is a gap between. So I mean, again, it's up to you. You can draw this as just a 3 month demand like that. And sometimes I do, like I say, it's open to debate here, but because it's got this gap between it, it's more of an SR level rather than a specific demand. You can see it did try and bounce off the top of it and came up, but then it came down much deeper. But again, I just consider them a little bit less reliable. They can be stop hunting zones, for example, and you know, in this case it was a stop hunting zone down to the downside, came back for the retest, but it wasn't that reliable on the retest. Having said that, like, while this example isn't particularly reliable, and you can actually see a similar example in the supply up here, I've seen a lot of alts with these structures and bounce off this type of level and take off from there. So again, worth having. But again, here you've got, in this case, when price was below here, this would have been a 3 month supply, drawn like that. But as you can see, it wasn't overly reliable, or it just went, I haven't drawn it properly, but it just went straight back up through and stop hunted it. But again, so the consideration of that is that, you know, the bigger picture is an uptrend. So while you typically expect all the zones to have a reaction, or the majority of the zones, particularly high time frame ones, to have a reaction, in this case it didn't, because you're countering the major trend. Plus it had a reaction slightly below, and you know, again, maybe this is an example of where I should have used the wick, because the reaction is slightly underneath it. Oh, sorry, the reaction is at the bottom of those wicks. Anyway, that's not an existing zone because price has now gone through it. So again, another critical point is if you're drawing a zone, but when the price goes through the zone is no longer there. You know, and so in contrast to support and resistance, where you would leave your support and resistance zones, your support and resistance levels in for supply and demand. At least for me, again, I delete them. Sometimes they can act as support or resistance on the retest the other side, and that's why I have these indirect, or these levels like this, unconfirmed levels. So that's sort of a combination of support and resistance with supply and demand. But to say that, for example, this, if price was back down here when it was coming up here, and this was a 3 month supply there, what you're saying is, in this red, green, red, in the opposite scenario, and I'll do another chart after this on supply side, but and here it did reject, very small rejection, and then just went up through it. But the point is, you're talking about orders that happened in this consolidation, and once price has gone through that consolidation, those orders are irrelevant. Yes, it may act as a support resistance level if price comes back there, but for me it is no longer supply or demand. There is new supply or demand now, which may happen to coincide with that price. But again, these are all things that are open to interpretation and entirely up to you. So from there, 3 months down to the 2 month, is there anything new? So there's a new 2 month up here. I think, anyone who wants to learn this, I think it's very good. Like, while it seems onerous to go through and do this on all your charts, you will get significantly quicker the more you do it. But I think it's really interesting. Like, I find it super interesting to see and to learn from how price will here had a 2 month demand, candle closed above, didn't close actually that strongly. Next candle then, obviously, at what point it went higher, I'm not sure, I won't go into that detail, but at some point in the next 2 month period, came back down, tapped into that and took off. So I think it's very interesting to see, the zones that worked and the zones that didn't, and think about them while you're building these charts. So now we would go back down, I missed the monthly, so now we're down on the monthly time frame, and again we've got a few more. So as we get further from where previous prices, I become less inclined to put, so I won't put any weekly zones in down here, for example. Monthlies would still be interesting if price revisited. But yeah, I don't see the need to sort of build your entire chart down to the 4 hour all the way back down in 2016. Those 4 hours may be useful, in fact, if you go back, and sometimes you do see very significant tests on 4 hour, even lower zones from long periods ago, but it's just a bit too onerous. So again, here you can see there's a monthly zone in there, and that when we had this big drop, for those of you around in 2017, and we had this big drop 6k to 3k, it just came back into this monthly zone. So when you're FOMOing, is probably a critical point there. So when you're, yes, you may have to wait for ages, but really if you're wanting to FOMO in, here on bounces and things like that, just look at your higher time frames and just wait. And it's the same now. People want to buy this thinking it might go to 150k, and yes, possible that will be double in price. However, your risk to reward isn't particularly good, or depending on what time frame you enter on. But you're really looking for price to retrace into a zone that's significant. And yes, sometimes this happens. This didn't retrace, like I really wanted the entry on this annual level here. Perhaps here it did get given. Then perhaps you might have wanted to wait here for the monthly. Didn't get given, it picked up a higher monthly. So, it's not always like with supply and demand, you're not saying, the purpose is not to say where it will test, but you just say if it tests there, then you will look for an entry. But it's not necessarily saying it will test here. If it doesn't, then you simply don't get an entry. Or you enter on, if it moves sooner, so for example here it moves sooner, then you look, you see, okay, now we've got a 2 month demand, that gives you your entry. But you haven't got a FOMO in, sort of at the top here and panic enter. And yeah, so like I say, it can be hard because, in this case, once it's gone up here, you're kind of like, well, what if it does come back down here and stop hunts these guys first? It could happen, but then that's why you have a stop loss. So going back to the monthly, so we have another little monthly zone there, little monthly zone here. I'll draw the boxes in a moment. You can see now, like what I said about this 2 month here, you can see it's just a bit messy. So it had like a monthly, again, it was like a messy monthly inside it, which it then came through and stop hunted because it's a messy and a weak monthly. And I'll get into the week strong in the next video as well. But for a zone to be strong, really you want to see a significant move away from it. So in this particular instance, you had this little monthly candle in here. The move above was just a stop hunt of that high. It wasn't a significant move off this zone. So therefore, when it came back, nothing wrong with trying to long it because you are in the direction of this local monthly trend. But in this case, you would have been stopped out, I think, yeah, just by a hair on that low. So yeah, now, like I say, I won't go down and do all the bottom of the chart on this now. So now I just start honing in as I go down the time frames, 3 week. But it is interesting to see, and again, you can see here that we had this bounce off the monthly zone that we had in here. It went up, and when it came back to retested the start of the up move, 3 week demand at the start of the up move. Nice and neat tap into there. Another 3 week down here. Excuse me. Obviously, as soon as you start doing a video, you need to clear your throat 1,000 times. So we've got a 3 week here. It wasn't tested. So also I'm looking, while I'm doing this, I'm also looking at what's been tested and not tested. Because zones that have been tested are unlikely to get revisited. You can see here this did get tested and then it just took off. And in this case, we've now got a number of zones that haven't been tested, particularly this 3 month in here, but also various weekly or 3 weekly here at the bottom, another 3 weekly in here. So you can see, I guess, as I'm building this, why my charts look so busy, and also why I use the colours, because it does make it much clearer. 3 week. Just watching on my other screen to see what Bitcoin's doing, but I've covered it up by something. So again, a couple of 3 weeks demand, and again you're seeing the colours build out, and you can see, you know, there's the annual there, there's this monthly and a 6 monthly inside it. There's a monthly or 2 monthly here. You can see with the text there, 2 monthly there is a 3 week inside it, there's a 3 week sitting on top of it. Down to 2 week, is there anything new? So if there's if there's sort of chop like this, I tend to put in all the levels, and again this is why I chose to start using the lines on top, just to make it a bit clearer. So there's a 2 week sitting in there with the 3 week. Similarly, there's a 2 week sitting just inside this 3 week here. And then we also, now we're starting to see some supply. So we've now also got a 2 week supply here, which is what I've been harping on about for those who follow my Bitcoin analysis recently, that I just wasn't going to be bullish anymore while we have this new 2 week supply that we've just rejected. So when you have a new supply or demand, when it gets tested, what you want is it to take out the low of the candle that created it. So this candle is the 2 week that created that supply. People bought in there, and then this candle closed down here. The next candle's tested it and taken out the low of that candle. So essentially, this 2 week is completed, the trade is completed. That doesn't mean it's not going to go lower, and it doesn't mean you can't short it again, but it's fulfilled its job. Its job is to take a retest and then make a lower low, which is what it's done. So yeah, that was just a bit that probably should come in my next video, but just a thought there for you. And I guess you can see a similar example here. You know, we had a 2 week supply that was created up here, and it dropped, went into the demand, came back up, retested the 2 week supply, and then dropped down to the next 2 week demand. So again, you're always just looking at price bouncing from supply to demand to supply. If one breaks, then you just look at the next one down. If one breaks above, you just look at the next one up, if there is one. In this case, there isn't. Other things I just sort of add to the charts, just so you've got an idea, is obviously I tend to put in orange levels, or like, actually I have red level for all-time high, but I put in orange levels for levels that I could watch for a stop hunt. So something like this, for example, where it's got 2 relatively equal lows. In that case, it did stop hunt this low slightly, but it's got 2, 3 relatively equal lows, so I just throw orange lines in there just so I'm aware, you know, if I'm starting to trade the top of this, if I trade the top, if it comes back down, then I know there's stops that might be hunted below, and stops that might be hunted into a zone that hasn't been tested below is also a very solid trade. So that's the 2 week. Then we go down to the weekly. We're just starting to see a little bit more. Just let me check, I didn't have any. Okay, so there was no new 2 weeklies in there, but now there are new weeklies. So what you're then looking for when you do these zones inside zones is you're looking for the more precise entry. Because if you're trading, you know, again, I'll get into this more in the other video, but if you're a swing trader, then sure, you can just enter on the top of the monthly, have your stop down here somewhere, or put multiple entries across the monthly, sorry, 3 monthly this is, and have your stop down here and just say, okay, 3 monthly is going to hold, that's my trade, if you're a swing trader. If you're a day trader and you want more tight entries, you might kind of go, okay, well, this is the top of the 3 monthly, you're going to watch for an immediate reaction off the top. but then you might want to get a tighter entry on this weekly inside. So you're looking at the levels inside zones that may also have not been tested, and if you may get a wick inside. So again, this is a weekly demand here, green, red, green, and above now we've also got a weekly supply that was created just on the close last week. So again, something else I'll get to in the next video. I draw all of these. Some people would say this is not a valid supply because the wick, it hasn't, because this red candle, while it's closed down on the body of the green candle before, forming the red, green, red, it hasn't closed below that wick. Whereas in this case, for example, I think the 2 week we saw that. So the 2 week you had your green candle, and then this red candle closed below the wick of the green candle. In this case, it hasn't. So for me, I still draw it because I still think you can see a reaction, and we are seeing a reaction as we speak. But what I would note is, for me, this is a weak supply. But that doesn't mean it won't work. It just means it's a weak supply. And you can see another example of that here, where we had red, green, red. This closed below the green candle, but didn't close below the wick. The next one's just swing failed the bottom of the wick before the test, and then taking out the low, but it's still all closed back in range. But again, we still saw the play out, even though this was weak. We saw the play out of the close below, this candle coming back up and testing weekly supply, and then in what order I don't know, at some point it then dropped down to here before taking off again. So it did play out weekly supply. I don't know if I should draw it for you just to be, okay, let me just delete that quickly so you can see this more clearly. This would be your weekly supply. So at this point in time, price has gone up. It did actually create a weekly demand, this candle, then it flipped it to supply, and you will find these kind of messes in range, and it becomes quite hard to see what's going on. And the majors that I report on are similar to this at the moment, just messy. You know, this closed above, creating a weekly demand, but then the next time it closed back through, but it was a weak weekly demand, and now it's a weak weekly supply. But in this case, and in fact in both cases, it still created a higher high after the weekly demand was created, and it still created a lower low after the weekly supply was created. So here it came up, tested, dropped, made a lower low, came back for the second test, and then went through it. So again, and that's when trend direction is so important. So this, you can still, we had discussions about this at the time. It's got a weekly supply, it's played out, but it had a range here. So this was your range. Just put my red range box in. It had a range here. Wicked above, wicked below, closed back in range, and then eventually broke and closed above the range before the bigger move. So these are sort of internal to range supply and demand, and that's why they haven't had the bigger reactions. But again, like I say, it doesn't mean you can't trade them, and it doesn't mean you can't trade them with a more distant target if that's what your bias is. So, in the case we are now, we've been unable to break this all-time high. We did have a weekly close above, but now we've closed back below. Maybe you're considering that this is the end of the run, and you want to hold this down, but have some reasoning behind if that's what you're going to do. You had a 2 week supply, that's great. There's a strong supply there. So you could have taken profit here. If you're still holding, again, you can still hold based on the fact that you think this 2 week supply is going to take us all the way down to weekly demand, which may or may not happen. That's just up to you and your trading decisions. Okay, so now that's weekly supply, and that's what we're testing now. So like I said, I've said in the notes, and typically I don't like to do 5-day and 4-day, just because it's just frankly too much information. However, because the weekly's been so choppy, and because you can see we had 1, 2, 3, 4 red candles, therefore it's not giving you much on other than way of entries, or you just simply wait until you get a weekly. But if you want to try and get the tighter entries, and again, just to be aware where the zones are, there was a 5-day in here. So there was a 5-day supply there, which it didn't quite create on the close of that green candle, but then did on this next candle. But again, it's weak. But again, you could see, you could trade a tap up into this pink level, what is it, 63,890, if you wanted to for a short. Similarly, there's another 5-day up here. This one didn't quite get tested. You know, if you want to trade 5 days, that's fine. You know, like when it becomes choppy like this, you've just got to decide if you're going to trade the high time frame. If you want to trade this 2 weekly, you can try and get precision inside it, but just know that you may not get the level tested that you want to get tested. So you can see there's a 5-day there that I just drew, the pink line, but actually there was a 4-day sitting just underneath it, and you can start to see now there's just simply too many lines, but it tapped into this 4-day. If you'd waited for the 5-day, you would have missed it. But these things just all make it much harder, but it's just too much information. So what else? Well, we also had a 4-day here at the start of this price move, you know, and that rejected there, and then it went higher into it. So, you know, you'll see as you go down the lower time frames what was rejecting price at the start of this move as well. I won't do any more 4 days. So then 3 days, one more that I would more commonly do. I'm not sure why, I don't know where that ever came from, but I started it and continued with it, and now I just do it by habit, and I find it again quite useful. So we have a 3-day here, just sitting under where the weekly is. I think this is a similar example to what I gave before. No, it's still green, red, green, but sometimes when I have these mid-wave price moves, so like ideally you want to enter at the start of an impulse after a consolidation, a significant consolidation like this. These ones are less reliable when you've got a string of green, some small consolidations, string of green. Doesn't mean it won't hold, it just means it's not as reliable as holding as at the bottom of the wave. And you can also add fibs and things to see if, you know, does this fall within the 61, if you're measuring this last price move. Is this at the 60, you know, at the 61 golden fib zone? In this case, no, it isn't, or am I on the log scale? So it's perfectly aligned with it on the linear scale. So you may say, okay, well, it's a 61 fib, you can try and trade that zone as well. Anyway, what else? So now you can see as we're going down lower time frames, because this is very choppy, it's just becoming chop, and you know, it was much easier when it was going up, and even here when it consolidated, but here we just had chop and mess. And you know, I am conscious actually at the moment that we had this chop and mess, and then eventually it just ran through it all. And this is a possibility of what might happen here, because we are seeing that all these zones are getting retested. I tend not to like taking second tests unless I see a stop hunt. So for example, this is a 2-week supply. I wouldn't alert this again because it's already rejected off it, so I expect it to have already gone lower. If it's hit demand, I wouldn't alert it again anyway, because it's still, unless it shows it's breaking demand. But if it's if price comes back here now, I would expect it to take out the high of the test if it comes back to this 2-week supply. Otherwise, it's showing that those sellers aren't as strong as you would want them to be. And then I would start looking at the lower time frames higher in the zone, but I wouldn't just enter at the start of that zone on a second test. Except possibly a rounded retest, that's the only sort of disclaimer to that. You tend to get an immediate test, and then if it goes down, you might get a rounded retest up into the zone that you can then trade later. But again, these, like I said, the other video, it's just nuance. So 3-day anyway didn't give much more other than this 3-day down here. 2-day, again, we have this 2-day weak zone again. So we have a 2-day in here. So again, you can draw it, you've got a red, green, red situation. This is a situation, for example, I would still take it to the top of the red candle rather than just the top of the green candle, because again, that's still buyers who got trapped right up to the top of that wick. This is a weak zone because it hasn't closed below the wick of the zone, but doesn't mean it's not tradable if you want to trade it. You just have to make decisions then surrounding, well, you've got this weekly that's not tested, you know, do you want to trade the bottom of the 2-day, which now it's obviously gone into, or do you want to wait for the weekly to get tested inside? Similarly, we did have another 2-day here, and again, this is another level that I would mark, and a zone I would mark, because while we've gone through it here, it's gone through on a stop hunt, so we never had a close above this 2-day supply. And what you can find then is that when price comes to test that 2-day supply, it acts again as resistance. So again, it's more of an SR level than a supply level now, because price has gone through it. But you can see that, and we had a short here from last week as well, that it came up and tapped the 2-day zone before again dropping. So those levels I'll often leave in, and sometimes I'll make them dashed. Probably not overly consistent about that. But as I say, this is up to you how you draw these and how you trade them. Just telling you what I do. There's another 2-day supply up here which hasn't been tested. So again, you've got a red, green, red. It's got buyers that are trapped in up here, stop losses, etc., etc. In this case, I would draw up to the top of the red wick. And then, yeah, I wouldn't look particularly lower to get the detail now. I still have all the detail from lower. You know, and things to be aware of as well. You know, you start to get this type of mess that we saw when we had trouble trading at the time. So I might put those in because this is a 3-day. But you know, it's when you're building the charts, just think about what you're doing and think about what you're seeing. Where has been tested, where hasn't. So you know, we did get some tests in here on the daily, 2-day, 3-day. This didn't come back down and test the top, but did tap off the wicks, off the very top of the wick, I think. Maybe not even quite there, not even quite to the top of the wick, so it was like a stop pump but didn't go back into demand. But when you go on the daily, you can very much see this is all the trend line stops are going to be under here. So noting something like this, again, I would potentially draw just a little line there just to remind myself later. It might make me less inclined to trade this 3 weekly, which I didn't like much anyway because it's a 2-candle 3 weekly. The 2 weeks, it's just a bit choppy and messy, and it's got all these stops right underneath it. So if we do come back here, yes, we may get a bounce off the top, but I would expect to go down probably and take those stops out. But again, up to you what you want to trade and how you choose to trade it. You know, it does have a daily demand right above here. So just putting some of these things in. And you've just, what you're doing is when you're drawing the zones is you're going, if price comes here, then you will trade how according to your trading plan. So if you're an investor, you might go, right, it's a 3-week demand. You're not going to care about this too much. You just go, I'm going to trade. I'm going to put my entries throughout this 3-week demand, or on top of it. I'm going to put my stop under here, or maybe you just put it further away under here, just in case you do get stop hunted, and you let it run, do what it wants to do. If you're a trader, which is obviously what my information is more targeted towards rather than investors, you're saying, okay, this is a 3-week zone. If price comes back into this 3-week zone, you've got possibilities for entering on the top, potentially entering around this consolidation just a little bit inside the top, or on this daily down here. You're conscious of these trend line stops under here, so you probably wouldn't limit order that. But if price comes back into here and gives you a low time frame pattern, so it comes down, comes into here, bounces, rejects whatever local supply is, stop hunts the low, breaks structure, makes a new demand here, then that's your entry with your tightest stop. But it doesn't mean you have to blindly enter in here knowing what you know about these stops underneath, etc., etc. So all you're doing is saying, okay, these are all my zones, you know, and you're building this chart accordingly, which, you know, is like I've sort of built this as we've been talking. It's saying, you know, if price comes down to these zones, that's when you look to buy. You know, if we stop hunt here at the top now, you might say, you might have a strategy that says, okay, we've stop hunted the top of this range. These demands are all weak because it's unable to break these sellers at the high. You actually now only want to enter on this yearly demand. But it is up to you. If you know, if you're a very high time frame trader, you might go, right, I'm just not going to enter unless the price drops down to 13k, or even 10 or 11k. But if you're a trader, a day trader, like a swing trader, a more regular trader, even a weekend trader, then you're going to be watching any bounces you get off these zones, and seeing what entries you can get. You know, this is the first zone of interest. when it comes to this weekly here, which I believe I've got alerted, I'm conscious of this daily, I've also got an alert on the daily below. You wait and see, are the lower time frames going to give you an entry? Anyway, we got down to the daily, so I don't want to digress too much, but I want to draw these in for you, even some of the older ones, so you can see. So again, you know, here, this top made a daily supply, came down, broke daily demand, or came back into this lower daily demand that had been stop hunted, went back up, retested this daily supply, dropped, unable to make a lower low at that point, took out that high but still held this daily zone, and then we had the bigger drop. So you're looking at how strong are the buyers and sellers. So the sellers at this point were pretty strong. You know, we had this massive push up here in a daily candle. So it was, you know, had a big, actually it was a big drop, but then the push up came the next few days, and broke above the high, was unable to hold above the high. Sellers came in hard and pushed it back down to demand. Still hasn't broken this demand at the bottom of the range, depending on how you view it and depending on your time frame. From a weekly perspective, you've just got wicks below this zone. But what you're saying to yourself, so yeah, like I say, this is a zone that I currently still have drawn in, like it's broken, but I'm also conscious that it's holding the bottom of the range, and if we hold, I don't have the actual zone drawn in anymore, but I have the levels that I wanted. I think I've got them in the form of a red box on my other chart, but the levels I was looking at to say that it held, you know, it held here, the bottom of that zone by a hair. So again, you're looking at how all this TA interacts with each other. But what you're looking at here is how strong are the buyers and sellers, and this is a critical example, is that these sellers at the daily here were strong enough to do a significant move down, but they weren't strong enough to break these new buyers. So therefore you can short the retest of the daily supply here. You know, it did give a reaction, tried to give another reaction. So if you're wrong, so don't be so worried that if you're wrong, because so long as you enter in a zone, the chances are you're going to get some sort of a bounce off the zone. Yes, occasionally you'll get a wick that runs through the zone and you'll just get stopped out. But as long as you stick to trading zones, you should at least get enough of a reaction to either take profit, break even, be right, move your stop to break even at least if it's messing around like in here, or take a scalp. So in this case, we had some sellers, they weren't strong enough to break the demand, so when it came back, these sellers tried again, but failed to make a lower low there, and then we came back and took out that high, but we remained in this daily demand, sorry, daily supply. And similarly, I've got another one, how I described this 2-day in here, there's another daily here. Take out that stop hunt now, but again, another daily supply there, which again you can say is holding this move down. You're going to have different time frames that you're going to view that on. So on the 2-day, it looked to be a little bit lower. On the daily, and you'll start to recognize this as well and recognize what you're looking for. You will get these stop hunts, they're unavoidable. Yeah, so sometimes at some points you're going to get taken out, but you can see this daily supply held a retest, held a higher retest with a bigger drop. But then when we came back up off this low, which was in I think it was a 4-hour, 1-hour demand down here that it held, it stop hunted the high. And now we're just, yeah, it's just choppy. And it gets to a point, you know, and we are at a point now, at least for me, that it's just choppy. So while we do have this weekly supply, so I do remain bearish, but I also know it's a weekly supply. We're still holding that range that I just said, so it could go back up through it. That daily up there, retested this 2-week, the 5-day, those are all zones that you could look at for shorts should the price go back up there. And or, you know, remember, obviously we're still in this bullish trend, and if we have held this as this range being the range low, then this can just continue up now, much in the same manner that this did. Anyway, I'm digressing a little bit much now. How long are we on time? 45 minutes, it's a bit longer than I wanted, but I suppose it's got the detail that you guys need. What I might quickly do is just look at an alt chart, or just something with more supply on it, just so you can see how I would draw. Let me pick an alt, something with more supply, just so I can show a downtrend. Let me look at Dash, just so I can show a bit more of how you're drawing supply, because that one obviously very much focuses on demand. So Dash is a nice example. Straight to the yearly, and I'll just do this very quickly, and you can slow it down and pause it if you want to, but that's yearly supply, and those who follow my alt analysis will know that that's entries I was looking at for shorts. As it came up, tap there, close the yearly below, comes up, taps yearly supply. And when you're looking at the high time frames, it really is quite simple. Maybe I'm making it sound a little more simple than I should, because it doesn't necessarily, as I've said, have to cut off the bottom of it. It could go anywhere inside this supply, but in this case, that's what you're looking at. Similarly here, I think I've talked to you about this before. So again, we did get, so this is a 6-month supply from historically, and I'll just draw it so you can see it for now. But so 6-month supply here, price came down, closed below the low, came up inside it and rejected. And again, I'm not sure in what order and how much it rejected, and maybe it went down to the bottom at this point in this candle, but eventually came up and came through it and swing failed it and just stop hunted above it, and then really went hard down through it again. In those cases, again, you can see this wick has come up to this 6-month level, so it is worth keeping those levels in, because people do see them as support and resistance later. So while it's not true supply, when you're looking for a stop hunt, and it's the same as the example I just gave on the 2-day on Bitcoin actually, that you've got the stop hunt which has then gone back through it, and then when it comes back and tests that same zone, you get the rejection. And these, yeah, like I say, quite often I'll make these as dash levels to show that it's not really a true supply or demand. Back below the price, we've got a 6-month demand. It's already a month. So just make that 6-month demand. 6-month supply I've already put in there. Don't know if there's nothing lower. 3-month. I don't always draw all the boxes around them anyway, so if you've got this 3-month inside the 6-month, it doesn't necessarily need to have a rectangle around the 3-month as well, but I'll do that just to show you, just because then you end up with far too many things on your charts. 3-month demand there, and you can see that I've actually got an alert 3 months sitting on top of 6-month demand here, and people get all freaked out when I say things like that, thinking I'm being super bearish, and actually when you look at this, it really does look like it's going to go down there. But like I say, it doesn't have to go there. It's just if it goes there, then I would look for a long on this 3-month or on this 6-month, or if it dips deeper inside, and again, draw a fib on it, see where it comes to. In this case, because it's coming off an annual supply, I do expect it to go down there. But at a minimum, for it to play out this rejection off this annual supply here, I expect it to take out the low. So if it takes out the low, essentially it's completed the trade, but that doesn't mean you can't hold it for lower. So that's 3-month, 2-month. So again, this is more of an indirect level, so I would put that in there. It's not really proper supply because it's had too much time, I guess, but up to you how you see that. Like some of these I draw, some of them I don't. I'm less inclined to trade if there's too much going on. So we've got red, green, red, but it's 3 reds before it actually breaks down. I'm not sure I've talked enough actually about consolidations as well. So here's just a quick example. So on the 2-month here, you've got green, red, green, like I've said, but there's green, red, red, green, red, green. So really this whole zone would have been a 2-monthly demand, in fact, to the bottom of that wick before price went above. And you can see again, it's tapped off the top of it. You can draw it the 2-month there, or you could have drawn the 2-month here if that's your preference. Like for me, that wick is included, so I wouldn't draw it like this, but again, 2-month, it's come straight off the top of it. So you're just looking at areas of consolidation that show you the green, red, green, and where you might want to enter a trade. Just deleted that because obviously we've come back through that zone now. So we had the initial tap off it. You could have tried to enter here for another long, but obviously it didn't get up past monthly supply and has then come lower. So 2 months, we've also got a 2 month here that just coincides with the annual level. Again, it's not a perfect 2 month, but I will draw it regardless. And monthly, so again you can see monthly zones, and like I say again, reiterate, this is why I encourage you to go back and draw things, draw the history, because then you can see, oh look, you know, this, when this came back up, it just came straight up to this 2 month indirect, and then there's monthly supply, and that's when it dropped. You know, and you hopefully will no longer be one of the people who's trying to buy here without looking left and seeing what you're up against. So again, here is a monthly, another monthly supply. Same here. So this is, again, this is a slightly more tenuous one because again we've got green, green, red, red. So again, I tend to draw it on the one further left rather than, sorry, the wick further left. But again, it's just a little bit messy, but I just want to have the zone in there. We just consider it as and when it tests that zone. Again, you can see here we have a monthly supply, close below even by a hair. So you need to be looking at these, you know, almost as soon as the month closes and drawing the new levels in, because you can get instant reactions like that. You know, I don't know how long into the month, the next month it did that, but you can get a very quick reaction off a zone. So you need to be drawing them as soon as months close. Anyway, I think I've probably done enough on that. That was just to show more of the how you're building the supply. But again, I would go down, continuing down on the time frames. If it becomes too choppy, so you can see now we've already got a few monthlies in here. Then if I start to do the 3 week, we're going to have more mess. And you know, while I say you should draw them, because you can then see things like this where it has, you know, in this case, come up, rejected on the lower time frame. It's rejected off the 3 week there and not quite gone into the 3 month, or that's gone into the 3 month before. These are things you should know at the time when you're trading this, but doesn't necessarily mean, unless it's a clean zone like this, hasn't been a test, like I won't draw all the little zones in because I can see that's already been tested. I draw the ones in closer to price because I want to know what's going on around current price. So there's a 3 week supply there, there's a 3 week demand here that you can see is attempting to hold, because you want to know what you're up against with local price. But if you're trading a monthly supply, other than seeing what's in it to try and get precision, if it gets too messy, it's just not worth having all the zones in there. I want to know the clean zones that haven't already been tested that might have a reaction when price goes back there, or if price goes back there. So, you know, I'm starting to look at this, then I would see, okay, there's a 2 week up there that's of interest. If price goes into this monthly area, there's a 2 week it might test. But do I really want to have this 3 week and 2 week and all these little levels in? Possibly not. I would have the ones closer to price and the ones that I feel are significant. But all of those is open to your own interpretation. And like I say, this is just how I'm telling you I draw it. Oh, I feel like maybe I wasn't clear on just one other thing with the body and the wick. So I did explain that when I do demand, this was a 3 month, when I do demand, I do from the body of the red candle to the bottom of the wick, and the reverse is true in supply, just in case I wasn't clear on that earlier in the video. So for example, this 3 month here, I'm drawing the zone from the body of the green candle up to the top of the wick. But again, entirely up to you if you want to draw it on the whole candle. Anyway, that's me up to about an hour, I think, so I am going to shut down this video. I hope that was useful. Please tell me if there's any questions or anything else you feel I should cover. Like I say, I will try and get to the video of how to enter, or how you can, different strategies that you can use to enter trades. I've put some notes and I've updated the color coding document that's linked to my channel, and I'll relink it as well. Along with this video, so you can either use the same colours as me if you want, or at least learn how to interpret my chart according to the colours. I put some notes in that of things to consider when you're trying to determine what's a strong or a weak zone, and zones therefore that you may or may not want to trade. So I hope that's helpful. Let me know if there's any questions.